get very frightening in my mind, and that's the beginning of a reset. One of these big banks, the Western banks, fails to deliver, creates a daisy chain of defaults and of forfeitures and bankruptcies and counterparty risk and credit default swaps and like bringing in AIG into the moment again, and boom, that's how it happens. Because they don't just own gold. Remember, these banks have a lot of fingers and a lot of pies all around the globe, and they're all incestuously tied together. So yeah, I mean, I don't want to over dramatize it, but that is ultimately, I think, something you could see happen if the powers that be on the other side of the table really wanted to turn up the heat.
In today's news recap, gold prices above $2,800 as U.S. core PCE rises 2.8% in the last 12 months. The gold market continues to see solid bullish momentum, with prices trading above $2,800 an ounce as U.S. inflation data remains stubbornly elevated in line with expectations. The Core Personal Consumption Expenditures Index, which excludes volatile goods and energy prices and is the Federal Reserve's preferred inflation gauge, increased by 0.2% last month compared to November's rise of 0.1%, the U.S. Department of Commerce reported Friday. Consumer prices rose in line with consensus estimates. Over the past 12 months, core inflation rose 2.8%, unchanged from November's reading. Meanwhile, headline PCE increased by 0.3% last month and 2.6% for the year. The gold market is not seeing much reaction to the latest inflation data, continuing to trade with solid bullish momentum. Spot gold last traded at $2,804 an ounce, up 0.31% on the day. Analysts note that the latest inflation data presents a mixed picture for gold. Elevated consumer prices will likely prevent the Federal Reserve from cutting interest rates anytime soon. However, the fact that inflation remains unchecked poses a threat to the economy, reinforcing gold's safe haven appeal. The report also highlighted robust consumption growth, with personal spending increasing by 0.7%, up from November's rise of 0.4%. The data exceeded expectations as economists had forecast a 0.5% increase. The latest consumption data is likely to support expectations that the Federal Reserve will keep interest rates unchanged for the foreseeable future. On Wednesday, Federal Reserve Chair Jerome Powell stated that the central bank is in no hurry to cut rates this year, given that inflation remains elevated and the labor market remains healthy. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
It used to take 2 to 3 days. Now it takes 4 to 8 weeks. And it's not just from the Bank of England vaults. Evidently, it's from all sorts of vaults all throughout the LBMA network. And what it tells you is that they don't have the gold to make deliveries. It's not taking that long to refine them. It means if they have to refine them, they don't have the gold. And that means the gold that they show that they have is not for sale. No one's getting rid of it. And if they don't have the gold, how close are we to some sort of an event where, I think in London, the numbers that if I remember, David Jensen talked about, they trade twice global annual mine supply per day, every day. In silver, it's 3.5 times annual global mine supply per day. And to his numbers, 90+% of all of these trades are paper naked trades. Now, the theory is that everyone's worried about a 10% import tariff on gold. And more so than silver, the argument against silver is that we're in a supply deficit here in the States, so he won't do it. because he has to import it. Don't know if that's true or not, but it would make sense. With gold, on the other hand, you have, I don't know, I haven't looked lately. There's a guy on Twitter that does a great job of showing the rehypothecation of gold, but it was always in the neighborhood of 1,500% or higher. I mean, that's just conservative. It's probably much higher than that. But that means that the contracts are sold over and over and over and over and over again. 15 people have the same contract thinking they have their own contract, is what that would basically mean. And cash settlement is very, very close at that rate. I was talking to a guy the other day at dinner in my community, and he is involved in aluminum and had a force majeure moment where his manufacturing business needs lots of aluminum, had contracts they couldn't deliver, they cash settled. It's force majeure. That's what we're setting up for here. And these players are saying, man, I got all these contracts. And when you have a contract, if I go short and you go long, well, most people just cash settle. Most people, like Miles Franklin, 2 bottles of water here. This is 5,000 ounces of gold in my warehouse, 5,000 on Comex. I sell here. I own physically here. If the price in my warehouse drops by $100, I'm down $500,000 in gold, but I went up 500,000 on what I sold short. I'm not looking to take delivery. I have it covered. A lot of the people are just speculating the way they do in buying stocks or going to the casino, and others are manipulating the market. And they manipulate it by naked shorting because they got massive, massive checkbooks. And maybe they're even being told by the Western elite, go ahead and do this for us, would you? Thank you. And by doing such, remember, you as the long have the right to say, no, 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 no. I'll stand for delivery, thank you. And that's what we saw in January. Massive deliveries, right? So what if everyone says, I see you guys are screwed. Delivery, please. Now, isn't that what the Hunt brothers did? Sure is. Hunt brothers saw the same exact things, and the exchange changed the rules on them. Said you can go long just 1 million contracts or so. You can go short as much as you want. Please, thank you. I mean, stupidity. But the point of it is that, yes, that is the rumor. But I would look much past that and say what you see are these claims, these promises of delivery in London. You got a whole big vault full of IOUs and a little bit of gold. And I've been saying forever, and maybe this is it. You know, the little boy who cried wolf, here I am. One of these days, wolf will coming, and maybe this is it. Maybe they all say, we got them cornered, y'all. Let's stand for delivery and watch what happens. And that's what they're doing. They're getting it home preemptively in case there are tariffs, because they know they cannot come up with the gold. But lo and behold, having the same problem in London with these delivery delays. So, you know, you can only manipulate a market over a very long period of time by pushing it in the direction that it is going. They are trying to hold back the global demand of powers that are as challenging as us, especially when you combine them all together.
In today's silver headlines, CTAs will continue to buy silver. While a few false dawns have emerged in the past, spot and futures prices are both finally breaking out of the wedge that has contained silver markets from the 2024's local top not reached since 2012. TDS's senior commodity strategist Daniel Gawley notes, a confirmed break from the wedge may attract further interest. The breakout in futures markets is relevant as it is likely to catalyze CTA buying activity, which directly attracts new directional inflows, which may become self-reinforcing. The break north of $31.55 per ounce in SIH5 will only force CTAs to buy plus 4% of their max size, but CTAs will continue to buy silver in nearly every scenario for prices over the coming sessions, barring a sharp reversal akin with a big down tape. A confirmed break from the wedge may also attract further discretionary trader interest, particularly with gold prices pushing towards all-time highs, given evidence that while this cohort may be involved in the EFP dislocation, they remain directionally flat. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
China is not just focused on gold and silver. Like I said earlier, they bought the London Metals Exchange. They're partnering with all of the rare earth countries in Africa and adding them to their Belt Road, and they refine 100%. They're buying up anything they can from future production to current inventory to what's coming out of the ground, even the byproduct sludge and the doré, and they're buying everything they can. It doesn't have to be gold and silver. It can be anything that you need. I mean, I think of like those video games that you always see the commercial, World of Warcraft or whatever it is. I see them all the time where on your phone, you start with a hammer and you build your city, and then you get to a point where now you get a drill and you build it, goes from straw to wood to brick to you build a whole big thriving city in a metropolis, right? But that's what this is. This is Zoltan Pozsar, Bretton Woods 3, isn't it? He who makes the rules has the commodities. It used to be he who has the gold makes the commodity or makes the rules. Sure, that's true. But he who has the commodities makes the rules, and it's not just the gold, it's everything. And they're using the fact that we've distorted so much through suppressed interest rates and asset prices that were only really driven towards financial assets, ignoring the commodities, and they realized that was the Achilles heel. I do believe that. They realized that was the Achilles heel, and they have gone at it in a incredibly methodical way that has allowed them to in essence, begin to corner everything and their partnerships and their relationships. And, I think to underestimate the significance of all this is a big mistake. And to underestimate China and what they're doing, just focusing on gold and silver, is a very big mistake. It will be everything from platinum to steel to copper to oil to natural gas to whatever they can. And then the routes to get there and whether they be on land or sea. And if we have to build the infrastructure to get from point A to point B, well, guess what? We'll be happy to do that for a little bit of what you're pulling out of the ground. That's the long game. We don't do any of that stuff. And that will, over time, there'll be a problem. United States Mint production for non-proof bullion, American Platinum Eagle coins, has varied over the years. In 2023, the Mint produced 12,700 1-ounce bullion Platinum Eagle. So, 1 out of 4 people watching this video over the next month could buy 1 platinum coin last in 2023. The 2024 numbers haven't been released yet, but the point of it is that the mints make them in tiny supplies, so they're hard to come by. They sell out fast, and the same thing is true with the UK, with the Perth, with the Austrian mint and the Canadian mint. They don't make many. They're hard to come by. They're worth owning some, and if you believe in anomalies, in historical anomalies, price ratio, et cetera, it's a hell of a buy. One of the crazy things that is hard for people to deal with, and they dismiss so much of what they believed at one point, is because logic and mathematics, and they've had a kind of a counterbalance or a counter. They haven't been. Logic has been contrary to outcome for quite some time. And what's the old saying? The market can stay irrational longer than one can stay solvent. But yes, I like it. It's a good value, but you're going to pay higher premiums than you would like, higher premiums than you would pay in gold and silver in terms of comparatively right now, because the U.S. Mint will make 100 times the amount of gold eagles that they did platinum eagles in a year from now. Well, they'll make well over 1 million of them in 1 ounce plus half quarter and 10th ounce. They don't, since 2008, the U.S. Mint has not made any fractional platinum eagles to my knowledge. And in 2008 was the last year really that I remember getting platinum eagles with any ease. So like it, but maybe tread a little lightly on how much you add to your portfolio.
What do you think about Andy Schectman's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.